It's time for Wallet Wednesday, and all eyes are on the Federal Reserve today. Fed Chair Jerome Powell is expected to announce another interest rate hike in just a few hours. We're here, it'll be early this afternoon when they'll announce whether they hike the rates or not.
So that's happening just past the 2022 midpoint. So we're about halfway through a pretty volatile year for the markets and our economy. So joining us live for a little mid-year checkup is Krystal Higgins, Vice President with Ferguson Wellman Capital Management. Good morning. Thanks for joining us.
Hello, good morning. Thanks for having me.
Yeah, so lots of economic news happening in the first 6 months of this year. Let's talk first about this Fed hike. What does this mean for the economy right now?
Well, as the Fed raises rates, it should slow down the economy, but hopefully not to the point where it tips us into a recession. Right now, the Fed is very focused on bringing inflation down. We've seen some 40-year highs. We've all noticed that prices have gone up significantly for various goods. So the rate hikes are aimed to rein in some of that pent-up demand that was built up during the COVID pandemic. Where we've seen the biggest impact of higher rates in the economy is housing prices and reduced construction activity. So just as an example, the higher mortgage rates increased a monthly mortgage payment of a $500,000 home by $800 from $2,100 to $2,900.
Yeah, we're seeing gas prices go down. That's one positive thing that we're seeing during this time. Will a rate hike affect that, or are they totally two separate dynamics?
Yes and no in terms of a rate hike, but we have seen gas prices trend downward. Generally, higher rates will slow down the economy, as we just mentioned, and that will trickle into reduced demand for oil and gas. So there's a little bit of a loose correlation. Unfortunately, the war in Russia and Ukraine has been the primary driver of the spike in prices. So we'll see if supply comes back up and demand comes down to hopefully come to a more sustainable gas price level. Beyond the rate hikes and Russia-Ukraine war, we have a saying here at Ferguson Wellman, and that is the best thing for high prices is high prices. So we think the costs we're seeing today at the pumps will naturally bring down demand and therefore gas prices or to that at least economically sustainable level.
Okay, you know, it's been this kind of 1-2 punch for everybody because we saw the gas prices go up, the war certainly contributing to that, but inflation overall has brought costs up for everyday items, for a lot of things that people spend money on. And then at the same time, you've had this roller coaster in the markets, and people are looking at their long-term savings and their investments and thinking, oh my gosh, all of this is such a mess. So what can people do when they're looking down the road for investments, for planning for the future, just to kind of ride this out?
Yeah, I mean, the biggest thing is not to change your strategy just because of the market volatility and the headlines that we're seeing. We know that it could cause a knee-jerk reaction, especially during market stress. We know it can be difficult to stomach those drops, but we've always recovered from a recession or a downturn over the long term. The tricky part is to know when the turn upward is going to happen. So if you miss that, even if it's just a few strong days, your investment portfolio will do worse than if you had just stayed invested.
Yeah, so that would be the case even with people who are looking at their 401k numbers and saying, wow, that does not look good right now. So you say stay the course, huh?
Absolutely. Even the most seasoned investment professionals can't time the market. So we've seen this time and time again. When you just stay invested, those portfolios end up doing the best.
Is this a good time to invest in anything right now? You know, when we look at just the overall inflation, your money's not going as far these days. Where could you be putting your money to make it really work for you?
Well, there's definitely been a lot of volatility this year. So prices have come down, that we've seen some resets in the market. So generally, you know, as a long-term investor, it's always a good time to invest your money. And even if you were the worst market timer and you invested at the top every single time, over the long term, you still see a lot of wealth creation over the long period.
All right, good stuff. Krystal Higgins with Ferguson Wellman, thank you for joining us.
Yes, thank you for having me.
And for more money-saving tips and finance advice, check out our previous Wallet Wednesday segments on coin.com. Just click on AM Extra when you go to the website.
All right.